Well, welcome back, everyone. Hope everyone had a wonderful long weekend from the market. As we ended last week and came into the beginning of this week in very similar posture, has the market done something that's negative enough to say this rally's broken? Well, my answer to that question is, I think we're on a journey to refuel and try to bounce again. Now, going back to February, March, late March, where you heard Rob and I talk you through price action coming up into a key level, that 50% retracement level. Some of the slips that happened still contained within our technical tools overall, suggestive of chipping away at that ceiling and breaking out. Now that's old news, it's history. We in fact broke out, came back and back tested it, and continued higher. Now, as you can see price trying to retrace back up towards highs that we may have not seen since early 2022, one asks themselves a lot of questions about sustainability of the rally. Is it too acute? Valuations deserving? Where's the economy going? Focus on price and let's move everything else out of the way. I'll just zoom in on the SPY a little closer here for you. These are daily candles, and you can see that today's candle has a move down, but a bullish reversal off the lows. Now in this pattern, it is more typical that we see a counterintuitive type move that pushes us back up, potentially even to a slightly higher high. And then if the market needs to refuel in earnest versus the small dip we had today, the move down would likely follow after a counterintuitive move up. Now that's what I've typically seen. What I also want to do before I take you to pinpointing what there may be in front of us and how I am approaching the market, well, I'm going to take you over to what you've seen me bring up in videos like these, a volume-weighted average price cone. So think about it as a probability cone, bell curve, tilted on its left 90 degrees, and VWAP is running right through the center. Now there's the SPY. You can see some horizontal lines running through the screen, weekly pivots. We closed below the center of the pivot range. That's not great. We obviously came down last week after making highs, and we broke a couple of the notches on the VWAP cone. However, we held the notch that was perforated earlier in pre-market and earlier this morning in particular for the SPY. We held above the half standard deviation marker above VWAP. The market's telling us that it's not ready to blast off and may need to gather a little bit more fuel. Coming all the way back down to VWAP still opens the door for a bounce up. But is the market objectively signaled to move down before it pulls up and to wear down? Well, I'm going to be inviting you to a very special session that I'm going to be doing tomorrow. It's never been done before. It's not a recorded session. And I'll give you the link and all that jazz. I'll just give you a little view of what that looks like. It starts at 10 a.m. Eastern Time tomorrow, Wednesday, June the 21st, 7 a.m. Pacific. And you can simply click the link in the email or go to becomebettertrader.com/go. Now, I'm going to be talking through a slew of day and swing trading strategies using tools like you just saw on the screen and much more. For instance, if we take a look at the multiple time frame view of the SPY, going to a big broad time frame like the weekly, we're riding short-term moving averages under the weekly price action. We are very clearly seeing a positive signal above the center of the channel in the subchart indicator. We've got some open targets. Open target 1, midline, and 2. Now, if I ratchet that down to a daily, it doesn't look as positive. Why? We already saw effectively that target 2 or within spitting distance achieved. Now, the pullback has taken price action below the speed lines. If you look at the subchart, you've got one of these red dots now. Does that mean it's a short signal? It's not a high probability one if you've listened to Rob on these, but we'd have to see that below the center line or zero line. What it means is the market is likely pulling back to refuel and back to support. Now, there is a logical basis for support at that target 1 area. It's a logical basis for support at the next area down here in the mid 427s. So what's the market signal to do? Well, we don't have a short signal on a daily chart, and I wouldn't expect one. We've got a very bullish weekly backdrop with probably higher highs in the weeks in front of us, if not actually this week. Now, Does the market have to go on a jaunt to refuel before it can push back up again? Or is the market at risk as this elastic band so stretched? Well, as we just saw in the VWAP cone, it's not very far away. The VWAP cone tells us that we were very far away on Thursday in the afternoon. We mean reverted largely. We may still come down and revert back down to the mean, $432. So you can keep that number in your mind. And we can now go back in and take a look at exactly where that 432 lies on the daily chart. That was an old target one. But if we break that daily chart that does not have a short signal on tap, just a manager longs, a trail tighter type signal, well, the 4-hour chart can then help us. Currently, the bar is still open. The target is in formation. In about a handful of minutes, as I'm recording this video from now, a handful of minutes, if that cyan dot remains in place, we've got some targets painted. Now, we've seen this story before in this run-up, and the likely option would be to come down, test somewhere between 432 and target 1, roughly 431, test the rising support of the channel, and potentially bounce. The alternative with the big bullish backdrop on a weekly basis and largely on a daily too, it's just pausing. The other likely outcome would be to pop up above the speed lines and just run and have a continued runaway breakout, which is what we've got here. So imagine getting into a trade on a simple, powerful signal. For instance, the cyan dot right over there, getting up to that target 2, taking profit, and then getting a resumption signal for a runaway. And now, at the hard right edge, having a cause to pause, but not officially turned down yet. The bar's not closed yet with the signal. If it does close that way, the runaway is probably at risk. Retrace back down to this target 2 area, and or the target 1 could become a reality, wherein more likely we get a bounce. Now imagine taking tools like these, combining them with your knowledge on when we are very far away from normal. Is it likely to pull us back to normal, or do we have room to run in trend? And adding them together in a methodical manner, being able to scan for them, being able to effectively identify higher probability trades, and pulling all of that together in a very quick time frame to identify, evaluate the potential for trade and where execution is plausible, probable, and then of course executing and managing to target. Well, I'm looking very much forward to sharing some incredible strategies from Rob and his multi-decade experience being a world champion in active trading. And of course, sharing strategies that I've been sharing with active trader room members and wealth charters, and right here on videos just like these. Join me tomorrow at 10 a.m. Eastern Time, 7 a.m. Pacific. Go to becomeabettertrader.com/go. In this type of a market where outsized moves are likely to be in play for quite some time, having higher probability strategies and tactics can make that big difference in one's trading. I hope you enjoyed the video, and I look forward to seeing you first thing tomorrow morning. Have a great rest of your day.